the inflation report came out, and February's CPI, Consumer Price Index, came in at a 7.9% annualized rate. So what that means, if you look at the trends, is not just that inflation is remaining high, but that it's actually accelerating from one month to the next. The rate of inflation is going higher and higher and higher. And obviously, with the world events that are going on right now, that could continue to be the case. So when you saw that, what were your initial thoughts when you saw that report?
Well, I wasn't surprised, and it is a little bit higher than I expected it to be, but I wasn't surprised that it was still that it's still climbing. All you have to do is go to the grocery store or go to try to buy anything, and you're going to see that prices have gone up. I suspect March will be the same thing. It's going to be high again. And it's too early to tell for after that. But even with all the current events going on, March it's already here, and you see what's happening. So, and everybody I talk to here in our local area, at least, or any vendors I deal with, they're still talking about raising prices. So as prices raise, there goes inflation.
Yeah. Well, one of the big factors contributing to that right now is the price of oil and
Yeah.
subsequently the price of gasoline. I can tell you, I went to Texas for 6 days, and in those 6 days, the gas station that I use at home, the price went up 54 cents a gallon in 6 days. I mean, that's just enough to make you want to gag. It was
Yes.
kind of painful.
Yeah, I think we're at record levels, aren't we? I mean, nationally, as the average, we're over $4 at this point.
Yeah, and it depends on how you look at it. I think the actual gross prices are at all-time records. I think the average hit 4.24 a gallon or something
Yeah.
like that in the last day or two. If you look at the inflation adjusted numbers and go back to the previous highs in 2008, I don't think we're quite there yet, but we're well on our way. And the way those prices are going up, it's certainly not out of the realm of possibility that we're going to hit inflation adjusted all-time highs pretty soon. And obviously, you've got the war going on between Russia and Ukraine that is continuing to grab the headlines. I know this week the United States uh, decided that they were going to go ahead and boycott Russian oil altogether. Um, I've seen some stories that the Biden administration was reaching out to some other countries like Saudi Arabia, the United Arab Emirates, and some of those folks weren't even answering the phone. So that's not a good sign.
Surprise.
Um, there are definitely foreign policy ramifications and national security ramifications from all that, but um, we're looking more at the financial side of things, but there's a lot going on in terms of boycotts of Russia. I think most of the major financial players in terms of banking and transactions either have already put some sort of a moratorium on doing business in Russia or with Russia into effect. If they haven't, they are probably planning to do so. That's putting significant pressure and significant pain on the Russian economy. And eventually, without financing, they may not have as easy a time getting the oil that they have out of the ground anyway. But even if there's not a significant reduction in output, the market is certainly pricing all of this uncertainty into the oil prices, which I think I said last episode that they might get as high as $120 a barrel, according to one expert, and I think that they flew past that pretty quickly.
Yeah.
So
I was actually just going to look it up here real quick to see what today's numbers were. And I'll check that out here in a second as you speak. I'll get it pulled up.
yeah, well, as you do that, um, I'm going to look at the inflation report in a little more detail. Something that we've talked about multiple times is that not everything that is inflating at the same rate. The 7.9% year over year is an average that is calculated. The consumer price index is basically looking at a basket of goods and what did that basket cost a year ago versus what does that basket cost today. It's not a comprehensive number. And there's another index that looks at what they call core prices, and core prices exclude things like energy and food. Well, obviously the big three that people spend their money on are housing, transportation, and groceries. So in those particular areas, inflation has been exceedingly high. So as we commented on last week, depending on what your income level is, you may be feeling the effects of inflation much more severely than maybe some other folks are. And the worrisome thing for me is when you see the rate of inflation continuing to accelerate, it begs the question, when is it going to stop? And it begs the question, what is it going to take to turn this around? And I think, the answer to the first question is that there's a lot of uncertainty about that. Before we dig in, though, let me kick it back to you. What did you find about the price of oil?
Well, from what I see, it's dipped yesterday and today, and somehow it's around 106 is where it's settled at, it looks like.
All right.
That'll be temporary, I imagine.
Well, it's volatile for sure.
Yeah.
And one thing that we've talked about in the past is to beware of volatile markets. I imagine when you're the gas station operator, you're not going to lower your prices by 30%, even if the cost of a barrel of oil declines by 30%, because tomorrow it might be right back up. So a lot of times when there's fear, those prices go up in a hurry, and then they kind of sustain until the volatility in the market tones down some. Because if you expect that there's a reasonable chance that prices are going to be really high tomorrow, even if you're not sure, you're not going to slash the prices today. So, it's funny how that always works. I know my wife and I always complain, the cost of gas goes up really fast, but it always seems to come down really, really slowly.
It takes the elevator up and the stairs down.
Man, you ain't kidding.
So it seems.
Well, so let's get back to those questions. How long? There's been a lot of talk that this was going to be transitory. I think that the definition of transitory has probably changed from something like 6 to 12 months to hopefully not more than a few years. But what's your read on that?
It's a hard read, right? So I think we're going to have inflation here for the foreseeable future. Obviously, at some point, it has to level out. But really what that means is as a consumer, as a family, we're just going to have to get accustomed to spending more money for products. And in a time like this, the best way to shield yourself is you have to make sure you have your emergency savings in place and you have enough of a cushion set aside, because you just don't know, especially if you have people dependent on you. You have children and you have a wife, you have family at home. When they say they're going to release reserves from somebody else, so just with the oil issue specifically, yes, you can stop bringing in oil from Russia, and it might only be, I think, 3%, believe it or not, I think is what they said we imported from Russia. Well, right. You can't just turn on the faucet and get that 3% by tomorrow. It's not going to take 6 months, but I expect to take 30 to 60 days to keep that market volatility moving up and down a lot.
Yeah. Well, I think that's reasonable. There's just so much that's going into inflation right now that it's hard to tell where the relief is going to come from. Um, I know I was reading probably 2, 3 weeks ago, maybe 4 weeks ago, that the Fed was looking at being fairly aggressive with their interest rate hikes this year. There was some talk that they might even start with a 50 basis point increase or a 0.5% increase in interest rates as soon as this month, March. Now that the Russia situation and the Ukraine situation is playing out the way that it's playing out, there's a lot more uncertainty. And so the Fed is looking at, I think, probably, at least the way it sounds more recently, they're looking at taking a more cautious approach, right? Because they don't want to crush the economy by blasting interest rates up super high, super quick. But we've talked in the past, and it's worth repeating, there are several contributing factors that go into why the inflation rates are where they are. One of those is monetary policy, which comes from the Federal Reserve. And there are two components of that that are really worth knowing about. Number one, how much money is in the economy, like how much cash are they actually putting into the economy? And then number two, where are they setting the base interest rates upon which all the other interest rates are normally pegged in a sense. You know, it's like when the Fed raises interest rates, you usually see a domino effect throughout the markets. So that's the Fed. Well, another contributing factor is government spending. And I saw an article where the House of Representatives yesterday or the day before just passed a $1.5 trillion spending bill. And that hasn't yet gone, my understanding is that hasn't yet gone to the Senate. But you know, the amount of money being spent by the federal government right now is just hard to comprehend. I mean, it's astronomical, and the deficits that they're running are astronomical. But a lot of times government spending gets injected directly into the economy. And so that's a way that keeps upward pressure on prices. And then another relevant fact for the moment that's contributing to inflation is the supply chain issues. So when there are kinks in the market that are causing issues with the supply chain, you see upward pressure on prices because the demand for products is outpacing the supply of those products getting to the market. And so when I ask where's the relief going to come from, I'm looking at things and I'm like, okay, well, the war between Russia and Ukraine is causing more supply chain issues in energy and food at the very least, possibly a good bit more than that. I know that there are some rare earth minerals and such that go into like microchips that are being impacted.
Nickel being one of them.
Well, yeah. So I mean, that's downstream from the automotive industry.
Yeah.
Nickel is usually something that goes into batteries. You know, I mean, it just the impact reverberates through the economy. So I don't see a lot of relief coming from that part. I honestly don't see government spending being significantly restrained anytime soon. And you know, now that the Fed is being a little more dovish with their interest rate hiking plans, you know, it remains to be seen just how much they're going to ease off of their easy money policies that they've had in place now for some time. So if we're not seeing significant changes from any of those contributing sectors. That indicates to me that inflation is going to be here for a while. So, like Saki, you were saying, it's good to get prepared for that, and maybe be prepared for it to be around for a while. Prices are probably going to keep going up for some time.
Yeah, I agree. I suspect that I wouldn't be surprised if we were in this period through the end of this year. Um, I've talked to myself personally. I'm in the market for a new zero turn lawnmower,
Yeah,
and just like you spoke, shortages. There's not. I mean, you could go to a big box store up until last year, apparently, and you'd see 50 of them outside. Well, there's not 50 of them outside anymore. And I talked to a client today about, a real estate client I was dealing with, and they were dealing with some companies about putting a covered back patio, and they're 6 months out. And my client said the reason for that is they can't get the supplies and they don't have as many crews. And he said, it doesn't matter. Even if he could get the supplies, he wouldn't have the manpower to get to you faster than 6 months. And if he had the manpower, he wouldn't have the supply. So he's got to have both. So
right.
that's two big issues for most American businesses right now, is not only supplies, but the workforce. And they have got to kind of solve themselves together, right, in order for the problem to be solved.
Yeah. Well, it's going to be continually harder and harder to get that labor into the market because, there are something like 11 million unfilled jobs in the economy
Yep.
right now,
Yep.
and wages aren't evidently they're not going up fast enough to fill those positions, or those positions would be filled. The labor participation rate is still relatively low compared to historical standards, which means the number of working age people who are choosing to try to get a job or to have a job is relatively lower than historical standards. So you might say that there's a lot of human capital in the economy that's sitting on the sidelines. And what is it going to take to get those people back in the job market?
Yeah.
And as long as that continues to be the case, there's going to be a lot of upward pressure on wages, and that's the other part of the wage price spiral, right?
Yeah.
I mean, you kind of bake inflation into the cake when you start seeing wages skyrocketing with prices.
The Purposeful Podcast.